Hey everybody, this is Jim at SP500chart.com. It's about 5:30 on August 4th, 2013, a Sunday afternoon. We're going to take a look at the S&P 500 chart using some time-honored techniques. Before we do so, I need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look at last week and specifically what happened on Friday. Well, here is our 15-minute chart. Let me center. There we go, right there. Center that up a little bit better. And just to remind you that we had been in this sideways consolidation that had been giving us a couple of different looks. To be perfectly honest with you, when you break a channel like we broke this ascending channel right here, you can see it, nice little channel off of that 1562-ish, where was it? Yeah, 1560s low, a move up of about 130 something, close to 140 points. Then the market says, hey, we cannot keep this up. So we break this channel. But remember, channels break for one of two reasons. They either break to do a reversal, and we've seen that before, or they break to go sideways and just not really lose ground, but take a breather. So it's like there's a lot of bullish sentiment, then that starts to be hit with some bearishness, where people are saying, hey guys, we're up close to 1700, that's pretty sweet, don't want to press my luck here. You know something, 1700 sounds pretty good, I think I'll sell some shares. So you get the little break, but then you get sideways. And after a while, maybe people are saying, hey, this really isn't going down. Maybe we're going to regather strength and go up. So the nature of the break of this channel was not really what I would call tumultuous at all. As a matter of fact, really on the grand scheme of things, clearly it broke, but not by much. As a matter of fact, I don't think we ever got much more than 1% and a fraction underneath what had been that previous high before we started to bounce back up. So we started to form what looked like might be a little inverted head and shoulders pattern here, and I'm pretty comfortable treating it as such. And with that in mind, and there you can see kind of not much of a left shoulder, but a pretty good dip, and then another little momentary dip, and now we're above this line. And because of the depth of this pattern, I am fairly comfortable at this point saying that we're going to get up into the low 1720s. Now, you'll remember we were looking at an even larger potential inverted head and shoulders pattern forming back in July, the head being in June, and I was expecting a right shoulder to form in July. We never got the right shoulder. We broke out on July 11th and just started going up without getting that move down to about 1624 that would have been so nice to have seen. Didn't happen. So do we stick with our target from this inverted head and shoulders? $64,000 question. If we do, then we measure the depth of this, what looked like it was going to be an inverted head and shoulders, and we add it on to the spot where it broke out. And as a result, we have from this not perfect pattern, we have an implied target of about 1755. and I think that can be met. But I would just, because this pattern didn't complete, I've got this little nagging reticence to make that call. But we've seen these little truncated patterns before, and they have met their target. So let's just snap a horizontal line on here, and instead of making it a bright green or something really obvious, we're going to make it this kind of light green, just to remind you that there is a potential target up here based upon the depth of this move underneath 54, 55, wherever this resistance line was. Now that we're above that, I think we've got the makings for a move up into the 1750s. And I want to remind you, we also have this rising trend line that used to be support, should now serve as resistance. So we've got a path underneath this line to 1755, and if we stay under this line, that move could be met within 7 to 8 trading days. Now, if we look at the week in general as we do our weekly review, this was a week in which 5 days in which there were signs of some bullishness. And the sign was basically very simple, and it was that on the 26th we had a good bounce down around 1676 and change, and that bounce actually took us up to a high that was higher than the previous day. The only thing is, because that happened on a Friday afternoon, you know what I'm going to say, could that have possibly been some late day, end of week short covering? And if it was, would it follow through into the next session? And lo and behold, we did start out on Monday with weakness, but not a tremendous amount, and we started to bounce actually before we met that low. And it was on, I believe it was probably on either on Monday or Tuesday, when I said, guys, we may be having an inverted head and shoulders right here. Forget. I think we may have looked at that on Monday, but forget what you're looking at here on Tuesday, Wednesday, Thursday, and Friday. The idea being, if we get over this line right here, it could serve as a neckline, which could propel us above this resistance line. But just to be frank with you, this, what looked to be like an inverted head and shoulders pattern on Monday, just kind of got squirrely Tuesday and Wednesday. So I erased that line because it just didn't look like we were actually dealing with a bona fide, for real, inverted head and shoulders pattern, though it still had some bullish tendency to it. So what happened was, on Wednesday, or either Tuesday or Wednesday, we started looking at the possibility that we have a dual nature chart here, that we had the possibility of a bearish head and shoulders top with a target that would take us down to about 1655, 1654, or we were going to have a bullish outcome that would take us up to the 1722. We didn't find out which one that was that we were dealing with until Thursday. Now, we are still not over this line by a huge margin, but the fact that we've stayed over this for 2 days, I take as a good sign that we are likely going to continue some upward momentum into the week. But still, don't lose sight of this lower line, because we've seen from time to time there can be a false breakout, and until we are that 1% above 1698, which would really mean almost getting up to our target from this small pattern, you can't really give this much more than a sign of bullishness I don't think you can say, yep, for sure we're going up to 1722. But at this point, it looks more likely than the bearish scenario. So I would say if we get follow through buying on Monday, then the market should put on a fairly quick 13 points or so, and possibly continue to pile on some gains until we get up to that 1750s, mid 1750s, at which point I still think if we see some selling pressure, I still think you have to say this market has more steam in it, because we're significantly above the previous two highs set in 2000 and 2007. We are also significantly above the trend line that we would draw over those two lines. As a matter of fact, if you want to know where that line is, there it is. It's right at about 1600. So it's more than 100 points beneath us. So guys, it looks like the bulls are just charging on ahead here. I want to mention one more thing. Some people have said this has been one of the least embraced and least loved bull moves in what some people say in history, at least in their own personal history of experience in the markets. People are still thinking this is just goofy, it's screwy, what's the rationale, etc., etc. So with that kind of thinking and where we are in the chart, I don't think we're at a top. I just don't. We could see a top form, but I don't see it yet. So enjoy this move. You can see we had a pretty good breather from 1680 down to 1560 something. That is a significant, that is a fairly significant move for the markets to have made. And then we got a good bounce off of that to set now new highs, new all-time highs in the S&P. But if we get up and we tag this line, I think that's where we start to maybe see if there's signs of a top forming. Now, the other thing that you can do is, and I don't know how much stock, literally or figuratively, I would put in this, but there's a saying in the markets, and the saying goes, the flag flies at half-mast. And that means often you get a pause in the action at the midway point in what ends up being a move that has a larger context. For example, we come off of 1560s up to almost up to 1700, call it, then we go sideways. Now that we're below that, would we then expect a move that could possibly get up over 1800? I am open to that. I'm totally open to that. Because here would be the first part of the move, then a sideways action, and then the second part of the move could be taking us significantly higher than what a lot of people are expecting. And we've seen this before. If we look in the chart, here, this is a daily chart. You can see back in late 2000, we had a move that went up and then started to show some weakness, got underneath our channel even, and now we are continuing that. So I guess what I'm trying to say is the chart is riddled with spots where we would start, here was a talk coming off the June low too. We go up, we break the channel, but really this ends up serving as a bull flag, and now we have our new leg. Could this be another bull flag? And now we start yet another leg. All I'm saying is I'm open to that. We don't yet have enough information in this current move off of this low back on the 26th to know if we're dealing with a channel, and if so, what it might look like. It would be one of my goals to hopefully catch the formation of a channel similar to the way we caught the formation of a number of other channels in the past. So let's see if maybe we do that. You know, it's looking like it's running a little ragged right now, so let's give it a couple days, see what develops, and see what happens in the you know, maybe Monday and Tuesday of this week, to see if we get a few more significant data points, be they highs or lows, to where we can know a little bit more, where we can draw some of our lines. Because right now this kind of has a little bit of a scalloped rounding shape to it, and to my eyes that makes it difficult to know where you might start a channel, because you've got, you see what I'm saying? It's almost like like a little bit of an exponential growth here, with this really kind of having a bowl shape. So guys, there's your video for the weekend and for the trading on August 2nd, 2013. We're above this line. That's bullish. It implies a move to the low 1720s. But again, we're not a huge amount over this line. If we were 1% over that, well, then we'd almost be there. So another situation where, because of the smallness of these moves that we're looking for in this particular point in time, by the time you get a real super clear definition of, yes, that's a confirmed breakout, you're almost there with your target. So, but this looks pretty bullish to me, being over this line for 2 days in a row. Let's see if we get our third day tomorrow, and if we can move on up and get up to the 1720s, and potentially reach what I think may be a realistic goal based upon the depth of this dip just before we broke out over that resistance at about 16 excuse me, 1654 or so. So guys, take care. Thanks for watching, and let's see what this week serves up.